there folks, and welcome into today's video. Hope you guys are doing great out there as always. First off, thank you so much for joining me for today's video. Today we are getting into how to scale from $100,000 to $1 million. This video is going to be highly relevant if anybody out there has around 100K, 200K in your account right now and you're trying to get it up to that $1 million plus number. And this video will honestly even be helpful to folks that maybe you got, 70K, 80K in the market. I bet you there's some folks watching this that have 70K or 80K in the market right now. Even if you have some of those type of numbers, this video will be helpful to kind of figure out like what are the changes, because I did a video basically, maybe I'll show you a thumbnail of it here or an image of it or something. I did a video a few days ago that was talking about scaling from basically starting out to scaling to $100,000, right? And the steps to achieve that when you're starting from let's say $1,000 or a few $1,000s to 100K, there are different steps than actually we're going to go through here today when you're scaling from, let's say, getting close to six figures, or maybe even you're over six figures to $1 million. Different steps, and it's a big thing. And by the way, if you're hitting the six-figure club, congrats on that. This is the six-figure club we have in the private stock group. It's a beauty. This is a heavy beast, man. The diamond award right there. But we want to go bigger, right? We want to get one of these bad boys, the seven-figure club. That's what everybody's trying to get. That's watching this video here today, guys. So yeah, I hope you enjoy this. As always, basically, I'm just going to be giving out a lot of gems in this video, a whole lot of gems on achieving this. Is something I've been through in the market. And I remember hitting that six-figure number, and it is a good feeling, especially if you started out with very, very small amounts of money. To hit six figures in the stock market is like a huge deal, and you got to understand it is achievable. You got to take investing serious now. If you're not already, what are you waiting for? There was a million excuses I could have gave when I first started in the market, and could have been like, oh, I'll do that in like 3 months from now, or 6 months from now, or next year I'll get to that. Like, you got to get in there. You got to take this stuff serious, and you got to get ready to rock and roll now. Okay, that's what's very, very important. So yeah, I hope you guys enjoy this. All I ask in return is that you smash that like button for this video. I hope you guys enjoy this. If you're looking to track stocks, track cryptos, keep up with news in the market, our newsletter, as well as listen to conference calls, things like that, right into an app, check out Hungry Bowl. Maybe I'll show you an image of the Hungry Bowl somewhere here. Definitely check out that. Absolutely free to use that. If you're looking to join my private stock group and download everything that is in my brain directly to your brain, check out the main pinned comment down there. That will be to check out the private stock group in the private Discord chat. And without further ado, let's get into these 5 steps. Alrighty folks, first step up here of these 5. This is really, really important one. This is a psychological one. Some of these points are going to be more things you have to do. Some of these are going to be more mindset related things. This first one, let's be very clear, this is psychological. This is mindset, okay? Patience. Patience. This is so vital, okay? I've been through this, and I've seen countless other folks go through this, okay? Where all of a sudden you're starting to get close to that six-figure number, or you even eclipse that six-figure number, right? You're at $100,000 plus in the stock market, and you start getting hungrier than ever. You want it now. You want $1 million now. You want the millions now. And you've had success. You've climbed the ranks to get there, right? And so now you're hungrier than ever. You're more confident than ever. And sometimes when you're more confident than ever, hungrier than ever, it can maybe lead to a little overextension. And I want to get this tomorrow. And oh my gosh, I achieved this, and now I can get here tomorrow. And you got to understand, when it comes to investing, patience is key, okay? Patience is key. If you're building a business, maybe you can keep going 1,000 miles an hour. But I'm telling you, when it comes to investing, you gotta take a deep breath sometimes. You gotta adjust, and you gotta focus on what you've achieved, and that to get to that next level, let's not focus on getting there tomorrow. Let's put a plan together over the next several years on how we get there, okay? This is very, very important. And when you start to get to bigger and bigger numbers, you got to start understanding it's about calculating your moves. I've seen a lot of folks get up to 50K, 100K in the market, okay? But to get from 100K to $1 million, from six-figure club to seven-figure club, you got to understand, this is so important, that it's about calculating your moves. This is really a calculated process and really figuring this out. And I can promise you, for every one person that became a millionaire from just winging it and just doing something crazy, I can tell you the majority, high majority of folks that are millionaires and have $1 million plus in stocks, like 99% of those folks made very, very calculated moves. They had patience. They understood this is still a process. And although they achieved success, getting to 6 figures plus, they understood, hey man, this is going to take me a few years to get to this next level, which is 7 figures, okay? Psychological step there, very, very important. Patience. Let's get into number 2. Alrighty folks, second step up here, this is actually more of a personal finance step of the bunch, but this is actually extremely important if you're trying to scale from 6 figures to 7 figures. And there's another thing that gets people in a lot of trouble, okay? And you got to avoid this. Watch those expenses. Here's the thing. All of a sudden, you have 6 figures to your name. You're at $100,000 plus, right? And especially if you've built from the ground up and you know, what's just a few years ago, you had $1,000 in your account or $2,000 or $5,000. When all of a sudden you've achieved and you got to $100,000, it's a huge deal, right? And you are more than likely going to feel really good about yourself. The issue is, what happens is a huge lifestyle creep when you start to hit 100K plus, right? And it happens to a lot of folks out there. And all of a sudden you wind up in a situation where you can't even funnel money into your accounts because all of a sudden you bought a new car, you bought a new house, you bought a new this, you bought a new that, right? And so you got to make sure if you are going to have you know, an elevated lifestyle, right? You got to make sure you're still staying way under your expenses, okay? Because the way you got here, more than likely, the 98% of people or 99% of people that get here do it because basically their income is much higher than their expenses, and they're able to invest that money into the stock market, right, and build up, and that's how you get to 100K, okay? Maybe 1% or 2% of people like inherit money or something weird like that, right? But 98% plus of people, you're not going to get to this number unless you basically have a higher income than your expenses, you throw that money in the market, you get gains on that, and you keep that ball rolling, okay? And so you got to remember kind of what got you there, and don't have those expenses creep up too much. If, you know, a good rule of thumb is you need to have a minimum of 10% of your income going into your stock market portfolio each month. A minimum of 10%. You're doing great if you can go like 25%. If you can go like 25%, you're beasting, okay? That's absolutely beast. Like 25% of your income, you're doing great, right? And if you can boost it up even more numbers than that, you're gonna make this game so much easier for you, right? It's gonna be so much easier. And the other issue is, you know, once you start building up and all of a sudden you have 100K, and let's say you're able to funnel $1,000 a month in, some people start looking at that and they're like, oh, it's only $1,000 and I already have 100K in my account. And I don't know if it's really gonna help that much. Yes, it's gonna help that much. It's gonna help in a massive, massive way. Remember, you didn't get there by basically saying, oh, it's not that much money. No, okay? It's gonna add up to a huge amount over the coming years. This is so key, especially if you're picking successful stocks, right? So that's number 2. Let's get into number 3 of these steps. Alrighty, folks, third of these 5 steps up here, very, very important one. This is a stock-based one, okay? Now is not the time to play it safe, okay? Focus still on long-term growth-based stocks that you believe are gonna grow exponentially over the next 5-10 years because you've put in the work as far as reading 10Ks, listening to conference calls, right? And all those sorts of things, right? And so you put in that work, you understand the business model, you know what you're looking for in these stocks, right? And so this is still where your attention needs to be. Just because you reached $100,000 in the stock market doesn't mean, okay, well, now let's just funnel it all into Coca-Cola stock and Pepsi stock or something like that, okay? No, okay? Remember, you're trying to get to this number. All right? And I can tell you, you're not going to go from $100,000 to $1 million putting all your money into Coca-Cola stock, okay? Or Pepsi stock. Not that those are necessarily bad stocks or something like that. It's just, it's going to take a long dang time to get from this number to that number, right? You still got to focus on those growth beasts. You should absolutely own some divs. You should, and if divs, that's slang for dividend stocks, just for anybody that doesn't know. And you should still be focused on some value stocks, right? Some dividends and some values, but growth stocks. Don't take your eye off the prize, okay? Just because now you got 6 figures in your stock market portfolio. Focus on those long-term growth beasts. I've been fortunate to, been in a lot of those stocks over time, and these are really the ones that are going to catapult you up to this number. I can tell you what catapulted me up to, $1 million plus in stocks was definitely a lot of those long-term growth beasts. Not to say that the dividend stocks, the value stocks aren't the ones, because there's in certain markets there's a lot of money to be made in value stocks and a lot of money to be made in dividend stocks. But I'm telling you, like, This is more than likely going to be the game-changing stuff for you, right? But the big thing is you've got to understand these companies on a high level. You've got to understand what you're looking for in income statements and balance sheets. You've got to understand what you're looking for in a business model overall and with a management team. These are extremely important things because without those, then it really becomes hard to pick successful long-term growth beasts. It's not like you can just look at, oh, this company grew revenue 30%. Let me put my money in that one. It doesn't work like that, right? You got to understand that business model, understand why they can continue to grow at 30%, or understand why, oh man, no, this business is probably going to grow 15% next year and then 5% the next year, right? You don't want to get into a growth stock that is at a very, very high valuation, let's say super high forward P or no forward P, and all of a sudden their growth is decelerating. That is a lot of times when you'll get a stock to go down 50, 60, 70%. Like, in a snap of fingers, we're talking 6 to 12 months, right? I mean, if it's at a cheap valuation and it's a growth stock that's coming off crazy growth, but now the growth is expected to slow, but the valuation is cheap, let's say it's trading at a forward P of 15, 20, something like that, fair play. But if you're in a stock that has a crazy valuation on it, meaning no forward P or forward P at 50 plus, 100 plus, and that growth is coming down massively, a lot of times those stocks all of a sudden are chopped in half real quick, okay? I was looking at a stock here today, actually a couple stocks here today that are perfect examples of that, right? I was looking at Etsy a little bit. I was looking at Fastly here today, and both those stocks, I mean, you see where those 52-week highs were at not that dang long ago, and you see where those stocks are at today, and a lot of times it's all of a sudden about, whoa, they're not going to grow at that rate, and if it already has a high valuation on it, man, there's a difference. Sometimes in the stock market, you get in a stock and it goes down 10, 20%. But I'm telling you, if you get in the wrong growth stock, you're going down 50, 60, 70%. Real quick, okay? Very, very important. So focus on the growth beast, but make sure you know what you're dang looking for, okay? Let's get into number 4. Alrighty, folks, the 4th step of these 5 steps up here. This is very important, okay? When you're climbing those ranks from the go, right? Sometimes you can get away with you didn't build a strong portfolio right off the jump, right? But now that you're reaching bigger numbers, 6 figures or over 6 figures, right? You want to build out a strong portfolio, at least 5 B stocks, at least 5 stocks that you can be super, super proud of that you own in your portfolio. At least 5. You can own 10 maybe even, okay? At the same time, you don't want to get too over diversified, like own let's say 60 stocks or something like that. And I've definitely seen that before. If you're going to own 60 stocks, might as well just buy an S&P 500 index fund at that time, right? You're not really a stock picker. You're just throwing money into everything essentially, right? So you need to be in at least 5 B stocks. So for this example, an ideal portfolio in my eyes for somebody that's at 100K or roughly around 100K and is trying to get to $1 million plus would be 3 growth stocks, 1 dividend stock, and 1 value stock. And if you want to expand this, let's say to 10 stocks, right? You feel more comfortable having 10 stocks in your portfolio. And as your portfolio gets a little bigger and a little bigger, you should add more stocks, right? When you're at $5,000 portfolio, you could be in like 2 stocks, right? And then all of a sudden you're at, let's say 50K. Maybe now you're in 3, 4, 5 stocks. Then all of a sudden you're at 100K. Maybe now you're in 6, 7, 8, 9, 10 stocks, right? And so if you want to say, let's do a 10 stock example. Let's say you got 10 B stocks in your portfolio, right? Then maybe we have 6 growth stocks, 2 dividend stocks, 2 value stocks, something like that, right? Or you could even replace one of the growth stocks with what's called a spec stock, right? A spec stock is essentially a company that hopefully has huge growth ahead of it, but it might be much smaller cap company. It might be seen as a riskier investment. Maybe this is a market capitalization of $100 million or a few $100 million or something like that, all right? So that's what you gotta really think about. Build out a strong beast portfolio. You got some real money in this game now. You're at 6 figures or near 6 figures or a little over 6 figures, right? You got some real money at stake. Time to build out a strong beast portfolio that is going to help you grow to that $1 million plus number, okay? Let's get into the last step of these 5 steps now. Alrighty, folks, the 5th and last one. Oh, this is a holy smokes, this ain't no joke. It's extremely important one, okay? And I got 3 points to make off of this one. When you get more money, you know what happens? The tax man, he's there more than ever. Watch the tax man. Watch the tax man. 3 core points I want to make in regards to tax man and as you get to 6 figures and hopefully scaling to 7 figures, okay? Keep in mind, make sure as the numbers get bigger, you are clean. What I mean is clean, by clean essentially, is make sure you are doing your taxes right. Make sure you know, everything is lining up as far as the numbers go. Because not a lot of people know this, but the IRS can go 3 years back when it comes to tax returns, okay? So as the numbers get bigger and bigger, there's a higher probability you can get on the IRS's radar, all right? So there's a higher probability you can get on their radar. So essentially, keep in mind, the numbers get bigger, you're a higher target, right? And they can go 3 years back, and you don't want to wind yourself up into a situation where maybe you didn't, you know, have some certain gains over here that you didn't write down to the taxes, or situations like that, right? You could run yourself into a lot of trouble, and then, you know, if they find a bunch of stuff, they're like, oh wow, this person made, you know, $45,000 in gains 2 years ago, you know, through stocks, and they didn't, you know, pay us for that. They didn't even write those numbers down. You know, keep in mind, you're going to likely be on the naughty list forever. And that's why you hear about certain folks getting audited time and time again, because likely they found something, mistakes, and now they're like, oh, we're going to audit them every time. And as you're building your wealth bigger and bigger, all of a sudden you're in this situation where you're always tied up into these audits and in those sorts of situations. No one wants to be in those sorts of situations, right? So watch the tax man. Remember, they can go 3 years back, okay? Next up here, long-term gains. As the numbers get bigger and bigger, okay, the long-term gains become more and more important. So basically, how you're taxed, essentially, is, you know, imagine you make really good money at your job. Maybe you make $250,000 a year, $200K a year, $100K a year, whatever, right? Or from your business. Let's say you got a good business and you're making 6 figures plus a year, right? Keep in mind, your tax rate might be high 20s, maybe even low to mid 30%, okay? Never mind if you got state taxes on top of that. Now, if you're taking short-term gains, you're going to be taxed at that tax rate, versus long-term gains, you're usually taxed at maybe 15 to 20%. So we're talking about a massive difference in money. All you got to hold the stock for is 365 days. 365 days, and then you can take your gain, okay? Now, I try to never necessarily make a decision to buy or sell a stock based upon necessarily the tax man, but it is important to keep in the back of your mind that, oh, I could hold the stock for an extra 3 weeks, or I could sell out today, and if I sell out today, I got to pay short-term gains at a 33% tax rate, let's say, versus if I just wait 3 weeks, I pay 15% or 19.6% or 18.6% or whatever it is, right? So this is very, very important, all right? Next one up here, this one catches a lot of people into some trouble, all right? Is essentially, imagine you make really good money on a stock. Let's say you make, you know, you make $40,000 profit on a stock, something like that. What most people do is right away, they're going to go invest that money. So let's say you put $40,000 into a stock position, right? And then it doubles. So now you sold it, and now you have $80,000. But you have $40,000 of taxable money there, right? Well, what a lot of people do is they just invest that right away into the market without even thinking about taxes, right? Because it's not taken out, especially if you come from you know, a workplace where the money's automatically deducted from your paycheck. You're not used to even thinking in a context of like, oh, I got to pay taxes on this, right? So imagine, you know, it's November, and you take this $40,000 gain over here in the stock. You put that $80K in another stock, right? Now all of a sudden, in that tax year, you need to pay that $40,000 tax gain you had there. Well, you put that money into another stock. Maybe that stock is having some troubles a little bit, right? And so it actually went down in the short term. So that 80,000 is now 60,000, right? But you're already in the next calendar year, and all of a sudden you're like, shoot, I need to pay taxes. And if you don't have that type of money around to pay the taxes, because now you're going to probably pay at least $10,000, if not $15,000 or more on that $40,000 gain, right? And especially depending on if it's a short term or long term, you could maybe even pay higher than that. All of a sudden you're like, shoot, I need to sell stocks to like pay the tax man now, or I'm going to wind up in another bad situation, right? And so all of a sudden you could be put in a situation where now you got to sell that stock that maybe is down, right, to just pay that tax gain. So keep in mind, as you make more and more money in the stock market, you got to think about the taxes and how this can impact you and plot these things out. Remember, I just told you guys, if you're going to reach from 6 figures to 7 figures, calculated moves. 98+% of people that go from here to here It's very, very calculated moves. We've been fortunate. I've seen over 100 folks in the private stock group reach those sorts of numbers. And I can tell you, I don't know any of them that didn't get there without calculated moves and really thinking things through and plotting it out and kind of putting things together and things like that, guys. So this is extremely important. All these things come in and factor in, okay? Now, let me know if you guys ever want me to do a video in the future around $1 million to $10 million and scaling from $1 million to $10 million. I can do that if you guys want. If I see enough requests in the comment section, I'll do it. If not, and this was enough for you guys and you feel sufficient, you know, that's fine as well. Just let me know in the comment section. I can always do a step-by-step video on, because every step is different, essentially. Every stage is a little different, and you got to adjust based upon the amount of money. So yeah, hope you guys enjoy this. As always, all I ask in return is that you smash that like button. That's literally it. I appreciate you guys in a massive way for being here. If you want to check out my private stock group, private Discord chat, check out the pinned comment down there where you can apply for that and download all the knowledge that is in my brain directly to your brain. Thank you for watching and have a great day.